Hello investors, welcome to Investors Central. In this video, we are going to check out details of a sectoral fund. And that sector is the backbone of the economy. And that sector is digitizing its ecosystem. This sector is improving its fundamentals. It has professional management and this sector has huge growth potential as well. Hope you have understood that the sector I am talking about is banking and financial services. One of the top performing funds from this sector is TATA Banking and Financial Services Fund Direct Growth. Direct mode in mutual funds does not require to pay any commissions to the distributors. For that matter, there are no distributors involved in the direct mode. While the expense ratio of a regular fund includes commissions as well that are paid to the distributors. For this reason, Tata Banking and Financial Services Fund Regular Growth has an expense ratio of whopping 1.91%, while the same expense ratio for Tata Banking and Financial Services Fund Direct Mode is 0.5%. Yes, you heard it right, it's just 0.5%. So the difference between the expense ratio of regular mode and direct mode of the same Tata Banking and Financial Services Fund is whopping 1.4%. Now let us check the other basic details of the fund. Inception date of this fund is 28th December 2015. Fund manager name is Amey Sathe. Fund manager start date is 14th October 2021. So Mr. Amey Sathe is managing this fund since last 4 years. NAV of this fund as on 9th June 2025 is 50.99 rupees. Net assets, that is AUM of the fund as on 30th April 2025 is 2751.84 crores. Minimum amount of initial purchase in this fund is 5,000 rupees and minimum amount for additional purchase in this fund is 1,000 rupees. Coming to the exit load of the fund, this fund has an exit load of 0.25% for up to 0 to 30 days only. And after 30 days, there is no expense ratio in this fund. Coming to the portfolio of the fund, this fund has 95% allocation in stocks and the remaining 5% is in cash. Out of that 95% investments, 98.02% is invested in FinServ companies and remaining 1.98 is invested in technology. I'll tell what the technology stock is in the later part of the video. Now coming to the top holdings of the fund holds HDFC Bank 22.39% in the portfolio, which is the top holding in this fund, and the stock is heavily concentrated, no doubt about it. Second highest allocation in this fund is given to Kotak Mahindra Bank with 9.23% allocation. Coming to the sectoral allocation of the fund, as we are discussing previously, the fund is FinServ sector fund, so 98.02% of the allocation in this fund is given to financial services and banking stocks only, but 1.98% of the allocation is given towards technology. Are you wondering why technology shares in this FinServ fund? It is because the company is Paytm, which is 197 Communications, which is into financial services, but depending on technology, it is providing those financial services. That's why the allocation is shown as technology sector. Thus, these are the portfolio details of the fund. Now let us check the performance of the fund. Coming to the performance of the fund, this fund has outperformed the benchmark in not almost, but all the time frames. Especially in the 1 year and 3 year time frames, the fund outperformed the benchmark by 11% and 9% respectively, which is a huge plus point for the fund that creates trust for the investors to believe and put their money in this fund. Now let us check the risk measures of this fund. This fund has an excellent alpha at 7.74. Beta is at 0.9, which is less than 1, means less volatile than the index. a decent Sharpe ratio at 1.09, and the index used for this fund is BSE Bank X. Thus, summarizing all the details of this fund has a low expense ratio in direct mode at 0.5%, which gives immense satisfaction to be its investor. While in regular mode, I will tell you. Instead of investing in this fund in regular mode, I feel it's better to go with a Bank Nifty index because we are paying a huge 1.91% as expense ratio, and I did not like this. There is high concentration in HDFC Bank with 22% allocation, which is little concerning. However, I will go with the trust that these many years the fund has outperformed using its tactical allocation strategies. Why should I not take the chances now? Is my question. Performance and risk measures are extraordinary, so as I said previously, it's a plus point. Last but not least, if I want to exit from this fund, exit load is just 0.25% for the first 30 days only. After that, there is no exit load as well, which I liked very much. So dear investors, coming to the end of this video, what is the allocation in this fund you need to have is the question. For this, you need to do a detailed risk profiling and understand your risk taking ability and select it wisely. All the mentioned things in this video are my personal views based on the information available in internet. So please do reach your investment advisor for perfect financial planning or reach us through comment section. Thanks for watching the video till the end. If you like the video, please do hit the like button, share and subscribe to Investor Central. Thank you very much. Love you all. Signing off. Bye.